That's Ali Barrett reporting in London. As a result of the coronavirus pandemic, markets now in bear territory. The Dow Jones ending yesterday's session at around 23,550 points. That is down 20% from a high at around 29,500 points in February. That's the general indicator for a bear market, with the news ending a historic 11-year bull run that started in 2009. The question, of course, is where markets go from here. Joining us now to discuss, Paul Dietrich, Chief Investment Strategist at B. Riley Wealth Management. Thank you so much for joining us.
Thank you.
So the president's Oval Office speech last night didn't really include that many concrete stimulus plans. It looks like investors not that impressed. The market's way down this morning. How did investors react to this news?
Well, I can't speak for investors, but I can tell you on Wall Street, most people were very disappointed because he talked about how we were going to keep foreigners with the virus out of the country, but he didn't say anything about how we were actually going to approach here in the United States. I mean, we've been almost negligent in terms of testing in the United States. South Korea has tested tens of millions of people where we're in the thousands. So we really don't know what's out there, and I think that's part of the fear and uncertainty. I think that the markets will actually bottom when one of two things happens. One, when we can see that we've seen a pattern in China where we have the infections, then the deaths come, then we peak, and then it goes down. And for the last 5 days, they've had only 10 new cases a day in China. We're seeing a similar pattern in South Korea, but we haven't even begun to peak here in the United States. But when that happens, I think that's going to be the bottom of the market, and we'll see a sharp V-shaped recovery when that happens. The second thing that might hit a bottom is if we see really effective government stimulus to the people who are affected and the industries that are affected. We're hearing that the Europeans might be cutting rates. I think some of Trump's stimulus program is okay. I don't think the payroll tax cut it's dead on arrival because the Democrats will never support that. But we need a stimulus to help those industries that are going to be most effective, like the travel, the entertainment, small restaurants, things like that. Once we see an effective stimulus program or support program for those businesses, I think that might hit a bottom, as well as when the new cases start going down.
Most health professionals would agree with you about the testing. It seems like that is this one universal thought here, that the more testing, the more cases you know about, and the more you could prevent this from getting really out of control. For a president who has based a lot of his successes on the stock market, and we know that he is watching the stock market so closely, why do you think he hasn't gotten that memo? Like, what is the disconnect?
I think he probably looks at everything politically. I think we've seen that in most of his decisions in office. And, you know, that's not necessarily bad for a politician. But in a health crisis, you want health experts to be in charge. And I think we've downplayed it. We haven't taken seriously the testing. And it really has been negligent compared to what other countries have done. It's almost an embarrassment that we've been so slow in finding out how many cases are out there, because you can't contain and you cannot treat until we actually know who's infected.
From the perspective of the markets, what does this European travel ban mean? How might this impact things?
Well, it's going to really negatively affect tourism. It's going to negatively affect restaurants and the travel industry, certainly, and the airlines. These are the major industries. I think we have to put in some perspective that not all industries in the United States are going to be negatively affected by this coronavirus. Some industries are going to do well. If you look at the most affected industries like travel, entertainment, restaurants, places where people congregate. You know, you hate to say because people are going to be negatively affected, but it is a relatively small percentage of the total U.S. economy. And so I think a lot of the predictions as to how earnings and how this is going to affect the total economy are a little bit overblown. But the truth is, we just won't know until we start seeing the actual impact of earnings, and it's that uncertainty that Wall Street hates.
Does the government have enough financial firepower to give the economy enough of a cushion here?
It does. I mean, you know, people have talked about that we can't lower rates on short-term treasuries because we go into negative territory. But there's lots of stuff that the Federal Reserve can do without going into negative rates. They can start buying back 10-year. They can start buying back 30-year bonds, and that would all stimulate the economy without going into negative rates. So we do have the power, and of course, we are the strongest economy in the world.
All right, thank you so much, Paul Dietrich, Chief Investment Strategist at B. Riley Wealth Management. Really appreciate your insight this morning. Thank you.